Hello everyone and welcome back to Zero Trade. In today's video we are diving into an exciting topic, easy profit with trading from levels. I understand the skepticism that might arise when you hear the words easy profits and trading together, but trust me, I am here to guide you on how it's achievable. But first, let's open a first deal for today. I've already chosen a currency pair and it will be British pound to Australian dollar. Now the price is at the resistance level, which is also a local maximum. So I expect a subsequent reversal and working off the drop after a sharp rise. Let's go to the broker to open a deal, and after that I will return to a trading view and conduct a detailed technical analysis to make it clearer for you. For this trade, 4-minute expiration will be enough, especially since the doji reversal candle has already formed. So the deal is opened and we can come back for detailed technical analysis. Let's consider the price movement for the previous period. So we can see that globally there is a gradual decrease in the highs in the lows. On the chart movement is a sideways trend. The strong influence of sellers on the market with the breakdown of the support level and the subsequent decrease in heights was already noticeable. So, the increased volumes of the seller's side, the chart broke the support level and thus locally depleted the price went sideways. And one more time, locally oversold asset sellers tried to form an uptrend. It can be seen by the increased fluctuations on the price growth. But with the reworking of the previous support level, which now serves as a resistance, and the increase in general activity with the opening of the London trading session, the previous outgoing trend was restored. Only after reaching the local minimum the price reversed in oversold conditions. And now we can see the growth with the return to the strong level. So, taking into account the reduction of volumes to buy from such a sharp growth that led to overbought, I expect the next reversal and fall in price. We can finish the analysis here. So I suggest moving straight to the main topic. I've been in the trading world for a long time and I've seen the highs and lows of the market. Throughout my journey, I learned valuable strategies that have helped me to make consistent profits. Today, I want to share some of those insights with you, particularly when it comes to identifying and trading off-key level in the market. The main indicator that I choose for myself when trading from levels is the RSI indicator. This indicator is useful because it allows us to determine whether an asset is overbought or oversold and helps to determine the direction of chart movement. Its values fall within the range from 0 to 100, and these are very numbers that help us. So, if RSI is equal to 50, it means that the average value of price growth is equal to the average value of decline. If the value of indicator is above 70, it means that the asset is overbought, and below 30, it means that it's oversold. But in fact, the value fluctuates between 30 and 70, so these values cannot be taken as the final figure. Before closing the first trade, I want to digress a bit before you go directly to the topic of trading from levels. I want to tell you about my Telegram channels. If you want to trade with me and double your balance, I invite you to my Telegram where you can participate and join trading sessions. Of course, in the private channel I hold additional trading sessions, share a lot of trading materials and show my personal statistics. So if you're interested in developing as a trader, I will be happy to share key information for your trading, so you can expand your earnings. To access the channel, just write me in your private messages with the phrase "I want" in the VIP. And my dears, we are at the final stages of this trade, so I suggest we wait until closure. And here it is. I can fix profits and move on the second currency pair. For the second trade, I picked up a pair of Australian dollar to Swiss franc. Here we will open a position from the upper boundary of the downtrend and from the intermediate level. I expect the price movement downwards as there was a landing with the recovery and now there is a new low on the area. So let's go to the broker to open a trade and then we will come back for a detailed technical analysis. So, as I can see globally, there is a downtrend. Even on low volumes, we can see the predominance of downward movement. But taking into account the increase in volumes from the sellers, which only intensified, it led to oversold assets and to the exhaustion of the sellers' forces. So, from this level, the price turned around and buyers tried to restore the previous value. But again, with strong resistance, the buyers failed to bring in the chart in uptrend. Therefore, before the growth of volumes at the London session, there is a mainly sideways movement. But with the increase in activity, the market returned to the downward movement. Predominantly, sellers influence the formation of the trend. So, the attempt of buyers to bring the price to growth ended with reversal from the local resistance level and a sharp fall into a drawdown. But now we can see a recovery to the downtrend zone as the sellers have lost their advantage in terms of strength in the market. Already in the recovery downtrend, I went for further price decline taking into account the new lows on the local interval. As an additional sell signal, I will note the decrease in buy volumes and the crossover of moving average on the indicator. And while the analysis is completed, we can return to the broker and talk about levels. Support and resistance levels are key indicators in technical chart analysis and trading in financial markets. A support level is a price level at which there is a large amount of demand for an asset and the price is unlikely to go below that level. A resistance level, on the other hand, represents a price level where there is a large volume of supply for the asset and the price is unlikely to go above the level. But how can we find support and resistance levels on our own? Of course, the most basic thing is to analyze the historical movements and find the highest and lowest price points. Firstly, you should identify the highest price points reached by the asset and mark them on the chart. These high points are potential resistance levels. Second, and by finding the low price points reached by the asset and marking them on the chart, you will identify potential support levels. In addition to finding them on your own, there are a lot of indicators such as level indicator, volume indicator, and even moving average. These indicators can help you identify trends and patterns in price movements, which can be useful for making trading decisions. As I said before, I prefer to use RSI indicator in my trading. By identifying overbought and oversold condition, you can avoid opening a trade at the wrong time. Instead, you can wait for the RSI to return to a more neutral level before opening a trade. RSI can also be used to confirm trends. If the RSI is trading upwards and prices are also trading upwards, this is a sign of a strong uptrend. Conversely, when the RSI is trading down and prices are also trading down, it is a sign of a strong downtrend. By confirming trends, you can also be more confident in your trading decisions. Let me remind you once again about my channels in Telegram. Where just on join trading sessions you can understand how to work with this indicator. If this is what you are looking for, then write me a phrase "I want VIP" in private message and you will have access to the channel with trading, sessions and major news from the world of trading. And now I propose to finish today's session. The second trade has already closed with profit. So, thank you all for being with me till the end. See you in the next training videos. Bye!